Who's with us? Michelle McKinnon, Scott Martin, Liz McDonald and Ashley Webster. I want to start with Amazon and the Bezos divorce. Michelle, Bezos's wife, if she ends up with half of his share ownership,
absolutely,
she'd have 8%.
A lot.
What impact on the company?
I mean, it could have a huge impact on the company, but I just encourage investors to hold it before we race away with all these different conclusions. We have no idea how everything's going to turn out. We don't know her demeanor, and we don't know how she's going to act. She's been in Amazon for a long time, and so probably her best interest is to actually see things that are positive for Amazon, not negative for Amazon.
However, in a divorce situation of this kind, and adultery is alleged on the part of Jeff Bezos, the common court response is you split everything, 50-50.
Absolutely.
So she would get $65 billion worth of Amazon stock. She would be in a position to affect the running of the company. Yes. Is that correct?
Yeah, but would that hurt her own shares, right? Because Jeff Bezos is the face of the company, and they could maybe go to the lawyers and restructure the voting rights of the shares.
Sure can.
Right?
Okay.
So I don't know.
That's entirely possible.
They're two very smart people. Jeff Bezos and his wife. So.
Scott Martin, come into this, please. We're suggesting that maybe this divorce is a negative for Amazon, the stock, and maybe the running of the company. Maybe. What say you?
I think it's a nothing. I think, like you guys pointed out, I mean, her wealth and her riches is tied to the company and the well-run nature of it, and the fact that it's also built up. You know, she's got some very good allegiance to the company over the years, given what it's done for her and her family. So, in my opinion, it would be in her best interest to, yes, like you said, Stuart, maybe restructure the voting rights, or just make sure that she doesn't get in the way of what Amazon is doing, because they're obviously a juggernaut.
Maybe she's got different ideas on the strategy for Amazon going forward. That would make a difference, Scott.
It would, and that could be a good thing, too. I mean, because look at the success Amazon had up to this point. Now, you make a good point. It depends on how much involvement she wants to have, given what we've heard as far as what Bezos has been up to in the last couple of years, being married and having things on the side, so to speak. So it depends what she sees for the company, but I think based on what we've heard so far, it looks like it's going to be an okay thing for the company itself.
Okay, let's turn to profits, because that's a big factor in the current marketplace. Next season, we kick off the profit reporting. Next week, we kick off the profit reporting season. Wall Street expecting a gain of about 16% compared to this time last year. Michelle?
That's a great number.
It's a big number.
It's a big number. And, you know, we definitely shouldn't discount it. I know it's past looking, and we now want to be forward looking. But even when we're forward looking, Stuart, I mean, the numbers come in about 8%, which is well above 7% averages. So I think we should be extremely excited about these numbers.
Okay. Scott Martin, though, you're not excited about these profit expectations, are you?
Well, the numbers are great, as Michelle pointed out, but they are backward-looking. And here's the thing, though, guys. I think the real issue is mid-year earnings reports on the quarterly side, because this is the quarter where I think the market already expects impacts from tariffs. It already expects maybe a little bit less consumer spending, or at least a rather outlook going forward for consumers, because of the fact that we have the tariffs implication. We've had, you know, really difficult comps now coming up in the next couple of quarters. So to me, this is probably the last really good quarterly earnings numbers we're going to have before we see some challenges into mid-year.
Got it.
Yeah, but small cap stocks also are going to have a blowout year that should have double-digit year throughout 2019. So even if you don't like the large caps, small caps could continue to show really impressive numbers here.
You've been bullish for a long time.
I'm always a bull, Stuart.
No, you're not
always, but, you know, 99.9% of the time.
Markets go up over time. She's right.
Okay. I shall try to remember that. Tesla, take a look at that. It's getting rid of less expensive models. You got to tell me
why.
Yeah,
it's basic model on the Model S and the Model X. As of right now, the tweet coming from Elon Musk not explaining why. They're only going to produce the high-end versions of the S and the X. The S will go now for $94,000. That's the price you're going to pay for that. The SUV at $97,000. They think this is an effort maybe to push more people towards the Model 3 sedan, which is supposed to be the more mass appeal one. Even the Model 3 with all the bells and whistles is at $67,000. It's not cheap, but no reason given by Tesla exactly why they're dumping the basic models of the S and the X.
It's only down $5 on a $333 stock, so not a huge huge reaction there. Check the big board. We are now down 130 points, 128 to be precise. That is a half percentage point. Look at Bed Bath & Beyond. Now, there's a stock that's been just taken to the cleaners recently, but they've come out with better profits and a rosier outlook. And Bed Bath & Beyond this morning is up about, what is it again? It's up 5%. Okay, I'm just trying to get that on the screen for you, but it's up 5%. We got that. How about KB Homes? They build new homes, and they expect to increase the number of homes they build this year. Well, the market's doing nothing. It's up 2 cents at $22 a share. How about the price of oil this morning? Where are we? 51.67. No real impact on the stock market, I don't think. The price of gas actually moved up a fraction of a cent overnight. Yeah, we don't like to hear that. It's about the second time in 91 days that we've gone up instead of down.
I love that you know that.
See, well, I'm very conscious of the price of gasoline.
It's amazing.
Let's get back to the retailers and Target. Their sales rose almost 6% over the holidays, but the stock is down 4%. Is this because of these expectations thing?
Yeah, probably a little bit of expectations. But what I really like is about how Amazon, I know we might talk later in the show, how they're going to really build out their retail. And so I think that's an extremely positive sign for consumers that maybe people are looking too negatively on Target right now.
Well, they're down $3. That's 4.5% on Target, even though their sales between November the 4th and January the 5th were up 5.7%.
Yeah, which did actually beat expectations.
Yeah,
and their guidance was maintained, so it wasn't like they lessened their outlook.
Yeah, foot traffic seems solid there, right?
Come on, what's going on here? Yeah, what do you got to say, Scott?
You know, it's an odd reaction, like you guys pointed out. The numbers looked pretty good. The stock hasn't bounced tremendously, too, over Christmas. It's come up some, just like the S&P 500 has. We don't own Target here, guys. You know, I still think, though, the world is big enough for maybe 3 big box retailers. And if you want to throw Amazon in there, too, let's say that. But it's basically Amazon, which is not big box, and then the big box and Walmart and Costco, the other 2 of which we own.
All right, we've got a new article, and it's coming out of the Wall Street Journal, and it says, never mind iPhone sales, Apple's service business really needs some help as well. Scott, that seems to me to be a negative for Apple's stock.
Well, here's the thing. A lot of the bad news is already out on Apple. I mean, I can't think of another bad thing somebody's going to say to Apple, and it's going to drive the price down further. I mean, think about what's happened in the last month to the stock and to the company. A lot of that is getting flushed out. But you're right. The service growth is really what's key for this company going forward. It's clearly not hardware like iPhones, Macs, and watches. So they've got to buy somebody. It's either Square, PayPal's probably too big. Also, maybe Sirius Satellite Radio. That's a massive money loser, I know, on their profit side. But that's another one that they could pick up to maybe pick up some service revenue in the future.
Here's the pro-Apple article. It's priced as if it's forward multiple, as if it's going to have no growth. I think it's priced at 10.
10 times,
It's got 1.3 billion devices. That's Tim Cook's argument for the services side. The negative side is, hey, wait a second. Are you having a senioritis moment, Apple? Because are you going to go the way of other hardware companies like IBM, HP, and Dell that all of a sudden shifted into services when your slow growth hardware didn't move? Is it a one-trick pony? That's the question about Apple.
Well, if I'm a long-term investor, and most of our viewers are,
right,
I think they'd buy it.
Yeah, you have to be a buyer here. And to look back in the past, we've done this before with Apple, where we all freak out that growth is stalled. With the 5C, everyone said it was a disaster, and then the 6 came along, and everyone loved it. So who knows, next year we could be saying the same thing, that we absolutely love the growth story, and we should have brought our buys in now. So I'd be a buyer.
Okay. Ford Motor Company will reportedly lay off thousands of workers in Europe. Is it cutting a... this stock never moves. It
never does.
Never moves.
Never
it's always 8, 9, 7, 8, 9. That's all that ever happens. I can understand them slowing down in Europe. Germany's economy...
Car market is just dying, and American car makers have no luck in Europe at all.
Yeah, that's true.
Not at all.
None.
Zero.
Yep.
And that's regardless of tariffs or trade fights or anything else.
It's a graveyard.
I tell you, Europe's a museum.
Yeah.
It is a museum. All right. Scroll up, please. I want to see what we've got next. What have we got next? Oh, thank you, Michelle.
We have a goodbye next. Oh,
next is goodbye.
It's a goodbye. I'm very sorry, everybody. Goodbye, Scott and Michelle.
Bye.
Thank you very much
Of course.
with us.